The first things first, US markets have ended completely in the positive after a 3-day sort of a losing streak. Those Fed blues sort of behind the market, with Powell making it very clear that there's no question of a rate hike. When the cut will come, well, it's delayed but not derailed is a quote that I read, and that probably explains what we saw in the US markets overall. So the Dow over 300 points up, the NASDAQ up, because tech companies are gaining from a softening of the bond yields, and that's what you're seeing over there. But Apple was the star of post-market coverage, because the numbers came in post-market and better than expected for Apple. Sales of iPhone have, by the way, slumped 10%, but nevertheless, the buyback that they announced has really enthused the market. About $110 billion. It's their biggest ever buyback. So Apple was the excitement over there, and there you have the Apple chart as well. Apart from that, I would say the bond yield cues have also pointed out to a fairly sort of a benign mood in that sense. The big trigger, though, of course, is going to be the non-farm payroll data, which is going to come up now. It's about 4.59, sub 4.6% on the 10-year. So that has eased off a bit. So has crude. Crude actually recovered slightly after quite a bit of a downtrend. It hit a 7-week low. Brent is now below $84 per barrel. So there's no real surprise why you're seeing your implied open looking that positive perhaps this morning. And just pull up Asia. Asia is largely opened up in the green as well, on the back of the cues that Wall Street is telling us. Implied open is what we should say, and yeah, you're looking at a pretty good start on the implied open, 113 points up. So the global setup, Samina, looks positive. What are the big sort of factors or the indications that the street is going to watch domestically?
Yeah, just one very quick mention, and this is how things change, right? I looked at an article this morning and said the yen has had its best week ever. This comes in after, of course, we all reported that the yen has been at its lowest level in 34 years. So you had a little bit of intervention. You had the Fed retaining its stand on rate cuts. The dollar, of course, weakened on back of that and gave a little bit of support to the yen. But that's how things work these days. It's either best year, best month, best quarter, and of course, worst as well. But in terms of market action, yesterday was interesting. What we've really seen this week is that new records were made in the early part of the week, but there was a little bit of pressure at higher levels, and that led to consolidation. So what happened on Tuesday was the markets did a very sharp U-turn. Wednesday, we went into a holiday. When we came back to trade yesterday, the markets were unsettled, nervous, not really knowing what direction they were going to move in. This, of course, came in on the heels of the Fed, like Tamanna said, delaying rate cuts, not derailing it. The markets tried to find their feet, stuck in a tight range. 22,600 became an important level of support, which was not breached even once through the full trading day in yesterday's session. What stood out for us in yesterday's trade was that Bank Nifty continued to see profit taking. So they made a new record high very recently. Conversations are on at about how 50,000 could be in sight for Bank Nifty. But for now, 49,231 is where we closed our trade at, with underperformance on Bank Nifty. Of course, this is going to be once again in focus this morning with stocks like Kotak Mahindra Bank. Remember, Kotak took a little bit of a backseat in trade yesterday. They also report earnings tomorrow. On the flip, stocks like Bajaj Finance could contribute well to the financial or the Fin Nifty in today's trade. So Bank Nifty will be something you want to watch out for. Broader markets have had a good run, so mid-cap stocks did quite well in trade yesterday, largely reacting to earnings. So like I had mentioned earlier, you had stocks like PFC and REC topping the list in terms of outperformers. Chola, which reported earnings, KFin Tech, PFC, like I said, Trent, Ashok Leyland, was some of the counters in the broader markets that had a good run and contributed quite well to the index and trade. As we gear up this morning, the VIX is up quite sharply. So while the GIFT Nifty is indicating to a massive gap up in early trade, what you want to watch out for, a couple of factors. 22,800 is where you've seen maximum call OI, which means that's going to be the immediate level of support, resistance coming in for the market. So while we may attempt a move above those levels, you may see some stalling at 22,750 to 22,800. The VIX is up 32% in the last 6 days. So that goes to show you that there is a little bit of lack of direction and uncertainty on the street. Along with that, what is worth noting is some of the IT companies are done with their earnings. IT has been a laggard. You had Cognizant reporting numbers yesterday, which weren't very impressive. So tech may continue to see a little bit of weakness. But largely speaking, Tamanna, it's going to be reactions on earnings, reactions on news flow, and the broader sentiment will be range bound. But the bulls for now, I think, are feeling fairly comfortable, even though the Wix is indicating otherwise.
You know, what I find interesting, Samina, is how we are in the midst of an election, one of the hugest political events in 5 years, once every 5 years. This is the biggest political event from the Indian perspective. And markets seem pretty ambivalent about responding to what's happening electorally. Just to add one interesting cue before we get to the top stocks that we're going to watch, and an interesting update. So Rahul Gandhi will be fighting a second seat from Rai Bareli. Remember, that's traditionally the seat that Sonia Gandhi has fought and won on. She has bowed out of active politics because of health reasons, but there is no Gandhi from Amethi. So that's an interesting sort of political tidbit in the middle of this market morning. But let's get to the big stocks and the big movements you're going to expect this morning. And I have to start with Bajaj Finance. Bajaj Finance, one way or the other, is going to see quite a positive move. So here's what's happened. The RBI has lifted their restrictions on their eCOM and or online digital Insta EMI cards with immediate effects. Now, remember, this is something that the RBI had imposed in November last year when there was action on a large number of institutions. The RBI was taking action one way or the other on several institutions. Bajaj Finance was among them. And those restrictions have now been lifted for Bajaj Finance. Now, they will, that means, resume sanction and dispersal of loans under this section. This is essentially your pre-loaded 2 lakh rupee loans, which Bajaj Finance was giving out, and the RBI was a little sort of circumspect about some of the details and how these loans were being sanctioned, etc. They had put in this restriction. Now, the way I see it, the fact is that they have lifted this restriction within the last 6 months. And Bajaj Finance was pretty clear in its last earnings call about the impact of this. They said that we're talking to the RBI. The fact that the restrictions have come back in fairly short amount of time is also pointing out to the ability of the management to course correct quickly. Remember, no big stigma on being pulled up by the RBI because there's a whole host of banks and BFSI segment companies which have by now. So this will be seen as a positive today. I think Coal India is another one that I would look at, and Coal India in terms of their e-auction prices might be a bit of a negative over there. So in terms of numbers, profits were slightly better than Bloomberg estimates. Revenues also slightly better than Bloomberg estimates. Margins were at 30%. Revenues have come down though. About 1.95%, not too much. EBITDA seems to be below estimates as well. There's a Citi note out there which says EBITDA is below estimates on lower e-auction volumes and higher employee expenses. I think net the big concern with Coal India is that there's enough of a supply with power producers, and even though traditionally now going forward power demand will go up in the summer months, there doesn't seem to be any real shortage as of now. So maintain or expect not too much of an up move on Coal India, maybe a bit of a negative sentiment, at least initially. And likewise for a Coforge. I was interested in Coforge and, wanted to put it on my radar because even as the IT pack has been having quite an up and down, Coforge has consistently been one of the top performers, at least in terms of how its stock has done. And we should pull up Coforge in the last 1 year or so. And it's done fairly well relative to the other IT companies, and there you can see it on your charts. But the numbers have not been great. EBIT has been down 4.1% by 74 bips. Net profit is down 5.6%. So it is soft Q4, I would say, for Coforge. Revenue and margins both are below estimates. And what's important is that the management hasn't given an FY25 guidance. They haven't given a revenue growth guidance. They've suspended it due to an uncertain environment, though they expect, contracts, etc., to improve. in the coming financial year. So I think Coforge might have a bit of a rough day at start as well. Yeah, a lot more stocks to talk about.
Yeah. Just very quickly, Tamanna, on Coforge, Citi actually is a sell, and what they also announced was an acquisition, which will be revenue accretive. So watch out for that one. They've paid a hefty sum, but they've acquired 54% stake in Signite Technologies at 1,415 rupees per share. This acquisition has costed Coforge about $250 million, and the revenue that Signite will bring to the table is going to be $220 million worth, which is 20% of Coforge, which is going to contribute 20% of Coforge's top line. EBITDA margins are at 14.5% for Signite, and this acquisition, as per the management call takeaways, was that it will be EPS accretive despite the QIP. They also very clearly stated that there'll be no further equity dilution. They're not looking at going out and buying any more companies. And while business for them is looking good at this stage, the fact remains that new business is coming in at lower margins. So while BFSI looked like it was in a sweet spot, the fact remains that new business comes in at lower margins, and that's what makes Citi a little nervous about Coforge. Their price target on the counter also not looking very impressive, but the revenue guidance which was suspended was the other reason why they sold it, and they don't seem too impressed with Coforge's Signite Technology buy. Along with that, a few more that we want to watch out for today is going to be smaller companies, but worth a mention. I want to start with the MOIL. The reason this one becomes important because it was up 9% in trade yesterday. From the get-go, the counter saw very significant buying that emerged and picked up in the second half of trade. The stock is up 40% this month, and the numbers are there to reflect why traders and investors have been holding on MOIL. They did increase their production by 22% YOY to 1.6 lakh metric tons, while sales for MOIL have grown by 17% YOY again. So that's what the markets have liked. Record numbers coming in on production and sales. The stock was up 9%. It'd be interesting to see if you get some more follow-on buying on the counter in trade. Along with that, RailTel Corp, and the reason I bring this up is while it may not be very large, but it's quite the theme that the markets have been excited about for quite some time now. Stock did okay in trade yesterday, but the numbers were not amazing to say the least. While the revenue was okay, it was up 25% to come in at 833 crores. EBITDA has seen a hit of about 10%. We will be connecting with the management midday to understand what led to the decline in EBITDA and the fact that margins have taken a big hit. So 540 basis points is a huge loss in terms of margins for RailTel. Reported margins come in close to 14% versus 19.39% that we'd seen for the same company. Profits, on the other hand, are up 25%. So there's a good chance that there could be a non-cash item or something outside core business that's contributed to profitability, or revenue or new business has come in at low margins. But I believe Harsh will be talking to them at some stage. We'll get a better understanding of what went wrong for RailTel. Along with that, Ajanta Pharma, numbers were okay. It'll be good to see how the stock does. Revenues were up 20%. EBITDA was up hugely, actually, 86% higher to come in at 278 crores. Margins have also improved substantially. I mean, you're looking at 26.4 versus 16.93. So I think it's not an okay number. It's actually a great number for Ajanta Pharma. And that stock could be one you want to track. Net profit also up 66% at 203 crores. So Ajanta Pharma, in my opinion, Tamanna, could be an interesting one. Small, but fantastic numbers.
Yeah. And interesting because in the pharma space, it has been quite tepid otherwise. A lot of the players have not had a great sort of quarter. So Ajanta Pharma, definitely an interesting one. Just a few more. KEI Industries, I thought would be interesting to look at. Their EBITDA is up 21%. Margin is also not massively up, but has stayed up about 19 bips, but profits are up 22%. Now, KEI Industries has been having a pretty good time because of order wins as well. This could be a further boost to look out for. That's one you should put on your radar. CEAT is the other one. Now, CEAT has actually seen profits come down, but that's because of exceptional expense of 58 crores. Board has recommended a dividend as well of 30 rupees per share. Their revenues have gone up, but not massively, about 4%. EBITDA is also up about 6.5%. So tepid numbers, and at a time when auto is definitely on top of everyone's radar. So might not see a very positive reaction for CIAT. Keep an eye on that. The other one, again, from the same space, CIE Automotive, and the numbers look quite negative on the face of it. Revenue is down, not massively, but about 0.5%. EBITDA is down 5%. Margins have also dropped slightly. Net profits down about 17-18%. So expect a bit of a downer over there. Just Blue Star, one more, and again, we'll be talking to the management. One which we should watch out for, because this is traditionally a good quarter for them. Blue Star has been doing well, but their profits have come down about 24%, even though their top line is looking decent, and so are margins. So we'll have to wait and see what the reasons for those are.
Yeah, I'll just add to that list, and these are good numbers. So I'm just like Ajanta, it's going to be Aztec Life Science you want to track in early trade this morning. Revenues were up 21%, EBITDA was up 136% to come to 12 crores. Small company, like I said, but again, good earnings coming in from their stable. Margins were up 500 bips to at 8.5 versus 4.24. They did post a small loss of 96 crores versus a 5 crore profit. The estimation of Bloomberg was about 1 crore, so more or less in line with that. So on top line, while the numbers have looked okay, very obviously we've seen some pressure on their bottom line. Yes Bank, watch out for this one. We will of course know exactly at 9 to between in pre-open trade what's going on. But if there are reports to be believed, Carlyle is looking to sell 2% stake worth 1,500 crore today, 1,500 crore rupees today in Yes Bank. Remember, in Feb as well, they'd sold 1.4% stake in Yes Bank worth 1,057 crores. CA Pask Investments, which is a Mauritian-based SPV, had sold about 39 crore shares at 27 rupees a piece. So this will be active. It'd be interesting to see who picks up this stake sale or the stake that Carlyle is looking to offload. Along with that, another smaller company but worth mentioning is Ugro Capital. Their profit has come in, they've actually reported a pretty good set of numbers, 133% uptick in the March quarter. But what's important to note is that are looking they've acquired or looks to acquire fintech lender MyShub Life for about 45 crores. They are also looking to raise about 1,333 crores via CCDs and warrants. So this one also should be on your radar. The stock gained quite sharply in the last half an hour of trade and could be one that continues to see activity as we see it this morning. So I think more gainers than losers, at least in terms of reporting earnings.
Yeah, absolutely. Just one non-earnings pace, Mazagon Dock. Maybe you should talk about is they've got an international shipbuilding order worth 42 million to construct 3 hybrid powered vessels. Not too many details right now on who that order is for and where, but Mazagon Dock definitely, you know, one which pops up now and then, so could be interesting today to watch out for. But let's get to the big stock this morning and the big story this morning, which is on Bajaj Finance. This sort of revival of restrictions or the lifting of restrictions by the Reserve Bank of India definitely been seen as a positive. Now we're going to look at it from 2 angles. One, what Bajaj Finance has been saying, what the RBI has done and why they've lifted the restrictions. And we're also going to be looking at it in terms of the financial aspect and what the impact really is going to be positively for Bajaj Finance. So let me start with Pragati and Harshpur joining us. Pragati, let's begin with what exactly the RBI had done and give us some context about why these restrictions were placed in the first place in November last year.
Good morning, Tamanna. Yes, on Thursday evening, RBI lifted the curbs from Bajaj Finance. This is 2 products, that is the Insta EMI and the eCOM cards. The Insta EMI card and eCOM products both were a big hit among the customers. In fact, the curbs were lifted with immediate effect. That's what the company informed us via the stock exchanges. In fact, it said that not just the sanctioning and doling out of loans has been restarted among on these 2 products, but also the issuance of new cards has been restarted. Now, the development comes after the lender had submitted its request to the RBI for the reviewing of these curbs. The timing is actually very interesting and significant here, because in the past, whenever we've seen business curbs being put on companies in cases of HDFC Bank, IFL Finance, Paytm Payments Bank, and so on and so forth, we've always observed that it takes the regulator at least 12 to 15 months to lift those curbs, but in this context particularly, just in about like a 5.5 to 6 odd months, the curbs have been lifted. So definitely it becomes a positive for the company. But let me bring in some context as to why the curbs were put in the first place. Now, as our viewers can see, the curbs were placed due to the non-adherence to certain guidelines, and the curbs came into effect in November 2023. In particular, it was the non-issuance of a key fact statement to the borrowers and also some deficiencies in the key fact statement. That's what caused the curbs to be put in the first place. Obviously, there was some business impact as well, and a significant impact was felt in the fourth quarter numbers because the new loans that were being booked was significantly lower. In fact, while there were about 4 crore EMI cards in force as of September 23, that's the last figure we had before the curbs were placed in November. After that, if we have to see if we can bring the numbers here once again, as we said, that the new loans that were booked were just at about 7.8 million. These are the quarter 4 numbers that we are showing our viewers. They were up just about 4% on a year-on-year basis. Quite a significant impact, clearly showing that a lot of business was coming from there. Harsh, why don't you run us through what other impact you are assessing and what the brokerages are in fact making of it now?
Sure, absolutely, Pragati. So just picking up from where you left off, 8 lakh odd loans is what Bajaj Finance missed out on in Q4 in terms of growth. 12 lakh overall in FY24. So while the numbers in terms of number of new loans booked looks large, as component of the AUM, it's not as large because it's just about a 4% impact on profit before taxes as of Q4 FY24. That's what most brokerages are saying. Also, in terms of the biggest positive here is the fact that it's the issue has been resolved in 5 months. This, and I quote Citi on this, is commendable in their words, and that could possibly be the key positive on the stock, even from a sentiment perspective. So let's pull out what Citi is saying. What they are saying is this 5-month rectification of deficiencies is what is commendable. That's what they are saying. The other key takeaway is that they believe that in terms of the guidance, things will start to get front-ended and the guidance will go towards the top end of the band. Now, mind you, 2 metrics on guidance. AUM growth, 26 to 28%. What Citi seems to suggest is now AUM growth has been switched over to more on the top end of the guidance, 28% likely. The other piece is what Pragati correctly pointed out is with regard to customer acquisition. 1.2 to 1.4 crore customers was the guidance. Street not happy about that, which is what the reaction on the stock price suggested. And therefore, what Citi believes is that that will also be at the top end of the guidance. So around 1.4 crore customers likely to be acquired in FY25, given that this has happened so early in FY25. Citi obviously positive on it, 8675 the target price, 26% upside here. MK on the other hand seems to suggest that the re-rating will also be from an earnings standpoint, which is a positive. Of course, the embargo lifting so quickly is a positive surprise in itself from a sentiment perspective. Likely a reaction on the stock. 4% of PBT was the Q4 impact. That will get reversed starting probably Q2 FY25. So plenty of positives in the near term, which were negatives just about in the short to medium term, and that's what's probably going to drive the stock price. MK has a 9,000 rupees target price on this one, 31% upside.